It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, wherever you are in the world today. My name is Patrick L. Young, and I'm welcoming you to IPO-VID livestream. This is Series 33, Episode 6. In the aggregate, we're coming closer than ever to 200. Episode number 198 is here. Gosh, and where do we start after a wondrous Christmas break? Well, there's so much to discuss, ladies and gentlemen. Developments in digital settlement made another huge leap forward this week. First of all, the LSEG announcing something that is in many ways the biggest news since the failure of their tourist settlement platform to get off the ground. The New York Stock Exchange, they've announced too that they're going to be tokenizing. All the ramifications of that were being discussed in Exchange Invest this week. Developments at the Egyptian Stock Exchange are moving apace. They've got to move towards a for-profit joint stock company and a future IPO. More than that, they've also got a new license coming to them. They're going to be developing futures and options products as well in the Egyptian exchange. The National Stock Exchange of India, the Colo crisis there, the holy hoax with the incredible guru, all of that looks to be just but a distant memory. Coming up now, a settlement in principle has been agreed with the regulator SEBI. And what does that mean? That means a spectacular IPO is going to be coming soon, ladies and gentlemen. Probably not this year, but look out for it next year, because that's going to be a colossal piece of initial public offering for everybody in the exchange Paris around the world, not just the Indian market itself, as the monopolist of stock exchanges turns over. And well, I would like to say something at this point in time on behalf of Nasdaq, a wonderful and esteemed sponsor and supporter of Exchange Invest, because, you know, ladies and gentlemen, investor appetite for Asia is rising, but post-trade friction is holding back markets. In the new Nasdaq Value Exchange study, 25% of participants plan to grow exposure, yet 46% face artificial growing pains. The biggest pain point, corporate actions, 60% report high error rates, and 39% of platforms are still legacy. The fix is clear, ladies and gentlemen. Harmonize rules, standardize workflows, modernize technology in order to unlock efficiencies in settlement and corporate actions. For exchange leaders ready to scale, download Creating Asia's Post-Trade Operating Model of Tomorrow. You can get that at bit.ly. And the good news is it's not a whole morass of code. I would like you to go bit.ly APAC/post-trade. APAC, all one word, post-trade. Download that fascinating report into Asia's post-trade operating model of tomorrow. Our guest today, ladies and gentlemen, by pure coincidence, happens to be someone himself with a fabulous pedigree from Nasdaq. And welcome to Roland Chai. He's going to be discussing Nasdaq's blueprint for Europe. Roland is the president of European Market Services for Nasdaq, having previously run Nasdaq's marketplace technology business. And before that, he was Nasdaq's first global chief risk officer. Prior to that, Roland, which I think was the first time I met you, Roland, you were at Hong Kong Exchanges. You served as head of post-trade there, amongst a myriad of high-level positions. You were head of equities at LCH.Clearnet Ltd, and you were a product development manager at Australian Securities Exchange. And I'm actually rattling through your many achievements very, very rapidly, because it's a burgeoning CV, and we would have much less time to actually talk if I read through the whole thing. Roland, welcome to IPO-VID. Welcome to the show. Where in the world are you today?
Thank you very much, Patrick. Delighted to be here. Here being Stockholm, Sweden. It's 6 p.m. and it's dark, it's cold. But yes, we're in the depths of winter, which is a great time in Sweden. Summer is probably my favorite time, but here we are.
Well, certainly summer's spectacular because you get lovely long days, whereas at the moment the cold winter nights are truly very, very lengthy indeed, whether you're in Stockholm or you're heading up closer to the Arctic Circle. But, well, Roland, with your accent, it's been truly quite a journey to manage to get to Stockholm, to get to Nasdaq. How did you first manage to get involved in markets?
Yeah, good question. So I started off actually Australian by birth, and I actually grew up in Hong Kong, but I went to university in Sydney. I went to law school, and my parents, I actually want to be a historian, but my parents, from my Chinese side, my Chinese fathers thought that wasn't going to get me a job. So I decided I was going to law school instead. And I left law school profoundly deciding I don't want to be a lawyer. My best friends are lawyers though. But anyway, putting that aside, I joined Anderson Consulting, which was pre-Accenture at that time, in technology, financial technology. So my first 12 years were very much in financial technology, but having lived in Hong Kong, I was very fascinated by financial markets, and I got involved in a lot of financial market things during my time with Anderson Consulting, and then spent a bit of time in London with Credit Suisse First Boston, went back to Sydney and worked in financial, so worked for Westpac in the early web FX days, and worked for Rothschilds there as well. And really there was a position that came up at the ASX at the time, or SFE at the time. It was interesting. I joined in 2006 on the day that the SFE ASX merger was announced. So even on the day I joined, I wasn't sure whether I still had a job. But so I think that was really looking at setting up a front-to-back futures equity derivatives, a CFD type futures clearing platform. So I spent about 2 years then, and I really had a great time doing that, and I loved the exchange industry. And then moved over to London to LCH, which was really my real concentration into post-trade. So really tech career, financial technology, and doing a lot of FX multi-asset class stuff, but then moving into listed derivatives and equities through the technology side of things. So coming from program management to business and product development there.
And you've had a really, really exciting journey as well, because I mean, just over the course of the last decade, you had the involvement with the Hong Kong exchanges, which is a very, very dynamic group with lots happening there as it's become such a pivotal approach to the Chinese mainland, and then moving on to Nasdaq.
Yeah, I think my time in Hong Kong was excellent, and I worked in a great environment. I think the market was very big and significant. I think Charles Lee was a fantastic leader there, and there was a lot of modernization going on. I think if you look at what they achieved with Stock Connect, and really it was a post-trade connectivity and interoperability between China Clear and HKEX, which was the Hong Kong Equities clearinghouse that enabled what is ostensibly very different markets to connect and allocate flows and distribute flows between a closed system and an open external system. And it was a very smart piece of engineering, financial engineering, to create that connectivity. And I think I remember when I was at LCH in the early sort of 2010s, and the idea of connectivity with China came along, and I think there was a lot of skepticism about how that would work. But when I look at that model, it was very close to the interoperable equities clearing model in Europe, and it is a very efficient capital model. And now I think they've gone on. I think they're working with Swap Connect, which is mainland to Hong Kong. So having that sort of external internal window is very good. It's very powerful for the access to the mainland market, but also in general, I mean, Hong Kong's a great. Having grown up there, Hong Kong's a fantastic place, and I do miss it, but it's a fantastic financial market as well.
Yeah, I mean, I must admit, I love going to Hong Kong. Well, actually, my honeymoon to Hong Kong, amongst other things, been there many, many times. But you mentioned Stock Connect. I think one of the things that's very interesting about that is, well, actually two things. One was previous regional link-ups had not particularly worked. And I wouldn't say there was necessarily blame with the exchanges there, but famously, I mean, there'd been ASX, Singapore exchange 15, 20 years earlier, which just had been beautifully engineered, but just didn't happen at all. Whereas Stock Connect, it is phenomenal, the success of what happened. Although the irony that always struck me as a daily reader of the South China Morning Post was it took the Chinese media about a year and a half to realize just the power of what had actually been built, which I thought was quite amusing, actually.
Yeah, look, but you've also got two very different markets. I think the evolution of the mainland market was very different, and the way that it structurally works was very different to the way that the offshore or Hong Kong. I mean, Hong Kong is a global market. You have all the global investment banks there. You've got a huge IPO market, a lot of capital flows there. So I think I think the key about it, and key about any, there's a lot that have been tried and there's some that have succeeded, but the key about that is really you've got to have the incentives for both sides to gain something out of it, and it really benefits their customers. And that's number one. And then the second is you've got to have the engineering and the actual financial plumbing in there that makes it work for everyone and reduces the capital flows and the risk that is at play.
Yeah, the risks that are at play, and obviously there are many and multivariate, as you say, how different the Chinese market is from the Hong Kong market, and how that's, well, actually ultimately ended up complementing each other very, very well. But as you mentioned, risk, I suppose that's a beautiful time to move on to your arrival at Nasdaq. And you became, if I remember correctly, you're actually the first global chief risk officer of Nasdaq.
Yeah, look, I think definitely Adina. I mean, she's been incredible in terms of what she's done at Nasdaq. I think setting up and really institutionalizing the risk function. There was a number of things that needed to be done. We at Nasdaq Clearing, we had some issues in the electricity market in 2019, and very much on the post-trade side, it was strengthening that. So looking at financial risk across all of Nasdaq, and then at operational and technological risk, and a lot of the work was distributed across that. But I think it was a fantastic to work at that time with 3 lines of defense. I think we did I did a lot of that in Hong Kong in terms of setting that up, and I think having a risk function that is working in partnership with the business. And I think it was a really good relationship that we had with the European markets as well as the North American markets, but and also because of the technological focus that we had, it was about ensuring that we led with resilience and risk-free platforms, and which were supporting extremely deep and liquid capital markets. So it was a big focus, but that was hugely enjoyable as well.
I'm sure it was a very stimulating period because, as you say, the fascinating issue to Nasdaq as a group is just how diverse and disparate the different markets are in the whole enterprise stretching across the world, which must have made it a really, really interesting challenge. And of course, that challenge then, I suppose, followed you through, because you then went on to head up the technology business, which is an even more fascinating and arguably even more global business, given the fact that it exists in, what, 110 or 120 different exchanges worldwide.
Yeah, no, absolutely. And that was a real privilege as well, because I think when I look at the business that was started with OMX and set up in terms of the trading platforms, clearing and CSD products that we have, and supporting, I think our count is 135 marketplaces around the world. I think it's great to be able to work globally with all our partners from Asia to the Middle East, Europe, and also LATAM as well. And I think across trading, post-trade, and the middle office space, I think that was really instructful in terms of understanding how the different capital markets, emerging capital markets, and also mature capital markets, and the flow of capital, and also the priorities between the different countries. and to a certain extent, obviously having worked at ASX and Hong Kong Exchange, now being able to provide a bit of empathy, understanding in terms of what's involved in running those, operating that marketplaces. And I think that goes back to why I love Nasdaq, is in the sense is we operate in North America and we operate in Europe here, the markets ourselves. We understand what the pressures are in terms of having resilient platforms, the debates we have with our regulators, and also the governments that we have. So we sell the software to the customers, and we operate those platforms ourselves. So I think that was really beneficial. I think the key thing I was very focused also was a number of post-trade implementations across the globe, from the Middle East to North America as well. And that also taught me in terms of trying to replace, as we'd seen in Hong Kong and we'd seen in Australia, trying to replace legacy technology is not an easy thing. And it requires a lot of effort, a lot of thinking, but it also requires the right engagement. And that's something that we work with our partners all over the world.
Yes, it's an incredible number, though, to think that you're in 135 different markets worldwide. I mean, that's quite a, or I mean, to have that sheer number of exchanges, I don't imagine anybody can manage to name them all instantaneously. It sounds like quite a difficult drinking game for anybody. But it's awesome. And as you say, so many pieces of the puzzle, including risk surveillance and things like that, the sort of stuff like market surveillance that we often forget about, but is really become so essential in modern digital times. And so therefore, you continue your Nasdaq journey, and you're now in charge of what is a hugely significant piece of business. Although for some of our deeply beloved cousins on the other side of the Atlantic in the USA, they may not realize just how significant the Nasdaq presence is in Europe.
Yeah, look, I think I've been based in Sweden since 2020, and I've worked with Bjorn and the European markets team for quite a bit. But since taking that over in late 23, I've really enjoyed that. I think to your point, we see that we operate from a Nasdaq point of view some of the best markets in Europe. I think the standout last year was Sweden, which was a really deep capital market. And when working with the governments, the institutions, the sell side, the buy side, there's a level of sophistication and a really innovation that's throughout all of the Nordic capital markets, not just Sweden. But it is a real privilege and pleasure to be able to work with those markets. And then also in this environment where Europe's trying to work out how do we grow and innovate, is really to help the companies and the success stories and the IPOs and the power of the public markets really demonstrate there are success stories. I think last year we've made over half of the capital raising and IPOs for all of Europe, and I think that's testament to all the efforts, not just from Nasdaq, but the whole buy side and the ecosystem and the broker-dealer community and the governments as well.
And that's a very good point, actually, because there's an incredible Scandinavian cohesion which has come around the entirety of the OMX group that then was absorbed into Nasdaq, which a lot of people don't really talk about. I mean, the quality of investment banking, broker dealing, and obviously the listing services, etc., is quite huge, which results in Sweden and the other Nasdaq platforms around the Scandinavian region as being remarkably significant, as you say. I mean, hitting pretty much well above your weight in terms of population, even for the whole region across the European Union.
Yeah, I think when you look at it, we separate into three parts. One is the depth of risk capital. So what is a risk capital there to be deployed? And some of the stats are, if you look at Denmark and Sweden, And the Netherlands, I think they make up, I've seen a stat, over 60% of the pension capital in the EU, which is an astonishing statistic. And so you have to have risk capital that is deployed into public markets. And at the center of it, you've got to have well-functioning liquid public markets. And so that's where we play a part of a role. And then on the investor side, you've got to have people who are willing to engage. So one of the privileges that we have in the Nordic markets, we've got fantastic retail engagement. When we look at the amount of liquidity that comes on board across the Nordic markets, definitely it's about 20% regularly, not just in blue chips, but also SME stocks. So you've got a very sophisticated and financially literate population, and that's something that's happened over time. But when you look at Finland, Denmark, and Sweden, they've got a very high financial literacy. The coverage of small cap stocks and also the amount of investment appetite is very large in these countries, right? And I think all of those elements, combined with pension reforms and things that the Swedish governments of both sides started, and the Nordic governments did in general in the last 20 years, have combined with that. And we've got a lovely little chart that sort of the charts sort of the growth, the pension fund reforms, and you'll like this, sort of scrapping inheritance tax in Sweden, scrapping, introducing the ISK, or the Swedish version of the UK ISA, but making it really simple to use, and having creating this environment where all of a sudden the pension and household investment starts to grow really strongly.
Yeah, and I think also one thing sort of struck me about the Scandinavian markets, as you say, is also the regulatory cohort. I mean, obviously, we can all spend our lives hoping that regulators would deregulate ever more and be whatever, but they actually are very, very coherent. They are capital markets oriented, and that's very good because they embrace and understand the risks of capital markets at the same time as not essentially trying to remove all possible risks and end up with a kindergarten that's really just a bond market and nothing more. And that's something I think is also very good because there is a cohesive push to allow people to take reasonable measured risk and allow companies to come to market, which is obviously very important for the growth process.
Absolutely. And I think in terms of having a sophisticated retail investor and trusting that retail investors will make the right choice and educating retail investors, I think the Swedish example is, and you'll find it on the Ministry of Finance, the website, is that there was an active engagement, not just by the governments, but also the trade unions into household participation in active ownership in the real economy of companies. So you've got this idea that people shouldn't just invest in cash or bonds or say put it under their mattress, but that you've got to educate and to have, and part of that is the political theory is that if you have an active citizenry that is engaged in the economy and investing in the economy, then you have much more active and much more better growth prospects around that. And look, I think you can debate the political systems that are there, but I think in the Nordics generally, to a certain extent, there have been very sensible approaches to capital, free trade, and open competition that have underpinned a lot of the industrial and financial success of the Nordics there as well.
Yeah, I think that's a key thing. And obviously, it is very interesting to go back to the IPO situation, because I mean, just today, we've had a couple of speeches about IPOs, and we've had one from Roland Chai, the CEO these days of the Hong Kong exchanges, who's super ebullient. They've got an incredible pipeline. They've already had, I think, 30 IPOs this year, something like that. And you also then contrast that with, say, Johannesburg, which has made a statement today because they've really in a complete and utter drought of IPOs, not wishing to get into their individual situations. Talk about your success, because actually we've had the opportunity to talk to various of your colleagues over the years, and it is significant how well the Nordic markets have been at cultivating IPOs. What's the secret sauce, without giving too much away, that brings so much IPO flow to your markets in Europe?
So I think number one, it's capital market formation. So it is active investment by the buy side, and there's a healthy mix of, I've mentioned the retail, but there's a healthy mix of investors, cornerstone investors in the Nordic markets, and people who invest capital in startups. There's a great innovation and startup culture in the Nordics as well as and in Sweden. The government is very supportive. So you need that culture in the startups, and then you also need a healthy. There's a lot of private equity, there's a lot of VC, and there's a lot of innovation, and all of those different aspects of investment and active managers in the pension funds. I think that is also a key thing: is active management rather than passive management leads to people taking a stake in companies and not being afraid to invest. And the flip side is that from the retail perspective, when they see a lot of institutional players in startups that and cornerstone investors, that creates an extra layer of comfort for them. But I think public markets is an avenue for a lot of companies. So, for example, First North, we've got 1,200 or thereabouts, 1,100, 1,200 companies in Nasdaq Europe. In our First North or sub 50 million region, we've got about 500 companies. So, give or take a bit like AIM, but those companies come to market and they may be they just raise small amounts of money, but there is appetite and support for that big pool of capital. So sometimes we may not get massive listings. I mean, last year we were good, but we have a steady stream of companies coming to market and tapping the market, public markets for that. And that may be equity, but also maybe debt. We've got a number of companies that come to us and use the public markets to tap debt and listed debt as well, because of the ecosystem so strong.
Yeah, and I mean, when you look at that sort of business, and actually, I mean, we had a great show, in fact, with Erja Jetson, your colleague, talking about First North, gosh, several years ago. I think it was IPO-VID 54, something like that, certainly quite a number of years ago.
Wow.
One thing that I think is very, very significant about that market is how also, again, you mentioned the broker dealers and the investment banks. They've really worked very, very hard along with the fund managers to take an interest in particular niche sectors. I can't help but notice that. I mean, I was in Malta last week, and you drive around certain areas of Malta, they talk about how huge their iGaming industry is. And actually, when you look at it, I think 9 out of 10 of their iGaming companies that have got their headquarters there are actually listed on Nasdaq Stockholm, either on First North or on your main board. It's very interesting how over the years you've managed as a business to really get your teeth into sectors and had also, as you say, not index following investors, but ultimately investors who are willing to sit and look at the proposition and invest in companies because they had a potential to grow people's pensions.
Yeah, absolutely. And I think just one thing to say is, like, we're not strong in all sectors, right? I think if you look at the Nordics, oil and gas is very much Norwegian and other places. There are certain sectors which, especially Sweden, if you talk about Sweden, is very focused on technology, biotechs, medtechs, renewable technology. There's certain, and I think the Mario Draghi's report on SIU really focuses on some of the parts is that Nordic industrial innovation has been very strong traditionally, and I think that has driven sector expertise. And I think one of the things that you have to be careful with is coming to a public market is do the companies, does the market understand your business, and do they know how to price your business? And I think we saw this in Hong Kong as well. It's like when you get into areas like biotechs and those kind of things and pre-earnings, you need to have a very sophisticated buy side that understands and is able to value those. And so I think in certain sectors, definitely the Nordics excel, but there's other sectors which the rest of Europe is good for, and it may be, I mean, the UK airlines, we're not speciality in airlines. So there's things like oil and gas airlines. There's always going to be sectors where some markets are better at providing valuation for those.
But still, you've managed to build in a lot of niches. And one thing I think probably is that actually you mentioned the buzzing startup scene. VCPE in the Nordics seems to me to be very, very well switched into also the ultimate buy-side pension fund investors as well. And that's something that seems to work in what is a remarkably small, slightly decentralized series of hubs that goes from Stockholm, where you are today, out across the Nordic region.
Yeah, look, absolutely. And look, I think when you look at Denmark as well, some great companies, Finland as well. I mean, there's incredibly huge companies there, and a very innovative culture. I think you also have to look at government policies towards innovation and support the quality of the university education, the number of the amount of VC capitals that's there, and then also the support in terms of I think in Sweden we had something called entrepreneur leave, where a bit like maternity or paternity leave, there is some leave that people can take from their companies to go off and do a startup. So I think there's been a lot of discussions in Sweden about how you balance that. I think there's a very high social safety net, and you pay quite in a social democratic way. You pay for your services and your taxes, but there is a lot of competition and license to go and innovate on the side of capital, labor, and there's a quite competitive services market as well.
All very, very good points. I'm going to allow you to have a couple of moments respite while we go into our book of the week and our video for this week. I'm talking to Roland Chai about Nasdaq's blueprint for Europe. We're going to get on to more of the specific European topic in a moment. But first, let's jump to America, one of our short Big World videos. And it's a question of fonts, ladies and gentlemen. Meanwhile, in Big World, over at the US State Department, Secretary of State Marco Rubio has made a decision. The US State Department used Courier New as its typeface until 2004, when it switched to Times New Roman. The font was changed in the Biden era to Calibri, which is now replaced by Marco Rubio, with a return to Times New Roman. I suppose Helvetica just wasn't MAGA enough. For more in Big World, like or follow. Yes, indeed, Helvetica, obviously not MAGA enough in order to be the chosen type font of the Senator for Florida and also Secretary of State, of course, former Senator for Florida, I should say, and Secretary of State Marco Rubio, who, of course, is presumably at this moment in time eyeing up with excitement what might happen in Cuba in the near future. But we'll get on to that another day, although we've been discussing it in Big World within Exchange Invest at exchangeinvest.com. Our book of the week this week, ladies and gentlemen, Infectious Greed by Frank Partnoy. It's all a fascinating tale about the emerging web of three-dimensional risk, complexity, and indeed, it has to be said, greed that led to more than a little degree of balance sheet confusion and crisis over time. Very interesting tome, that. Well worth a read if you have the chance. Infectious Greed by Frank Partnoy. You can get a link on our website with the show notes if you drop by exchangeinvest.com if you wish to buy it via Amazon. Now, moving back to our conversation today, it's a joy to have here the head of Nasdaq's markets in Europe, the supreme commander, I suppose, of Allied Forces. You occupy that fabulous office, I know, which I always really, really loved visiting in the past. Roland Chai, our guest today, the former Ford factory in Stockholm, where they used to assemble the Model A before the Second World War. What an interesting and storied building that is. However, right now, what we're looking at is obviously, how do we move forward with European capital markets? And you mentioned earlier on the Draghi report. What do you see as the role for Nasdaq building forward the EU 27's capital markets position?
Yeah, I just say on the office, we're not in that Ford factory anymore. We moved in November, so we moved downtown. into a new location, and yes, we've departed, but it's an excellent office location in the middle of Stockholm, so we're quite happy with that. So talking about the SIU, look, I think in December the European Commission released a number of proposals. I think the recommendations are quite broad across across supervision, and also recommendations on the pension ISK or type savings type incentives. I think broadly speaking, we definitely see that there is an urgency. There's an urgency to the program of doing something, and understanding how we can unlock our markets. I think when we look at the 7 markets that we operate in, we still see a lot of barriers to cross-border flows, especially on the post-trade. Being able to move in the friction of moving investor capital across one country to another is quite complicated and painful, and the links are not there. So one of the things we've stressed on is having a much more efficient post-trade that supports capital, but also on the buy side. I think on the risk capital side, there needs to be much more frictionless movement of buy-side capital that goes across markets. And then on the common supervision side, we need a level playing field. I think we've focused very much on there is a lot of arbitrage between different EU jurisdictions, and having a much more managed or actual level playing field is extremely important. I do think there is a lot that can be done, and a lot that can be driven. I think that a lot of the debate is, okay, which model is better? How do we do it quickly? And what is going to have the most impact? I don't think there's any silver bullets here. I think there is a number of measures, both on the risk capital side, the capital formation side, and the actual company issuer side that needs to be happened. So part of that is simplifying listing rules, and we're doing that and harmonizing that across all the different markets. But I do think it is a step in the right direction, and there is a real willingness to be able to tackle some of these issues. So I think that's hugely helpful. Is it all going to happen overnight? I think there's a long way to go. But to me, part of it is going to be getting the right environment for capital to form and fixing the post-trade, right?
So it's very interesting what you say, quite agree. But at the same time, there's been a bit of discussion. Some people seem to be suggesting we should almost move to a single European stock market or something like that. I presume you might find that a little bit challenging from your exciting niche in the Nordic states.
Yeah, look, I mean, whether we see it, I mean, from the Nordic experience or even the US experience, like in the US, you have, you've got, obviously, aside from Nasdaq, you've got New York Stock Exchange, a number of exchanges there, and it's all a competitive environment, and yet you still have the deepest, most liquid capital market. So when you look at the US internal market for equities, there is not one single exchange, and yet they have deep liquidity. So you've got to question yourself, all right, why is this single exchange going to solve everything for Europe? It's not. If the US is able to live with multiple markets, they do have one CSD and one equities clearinghouse. So I think, to me, that it's almost it's a red herring to sort of say, well, it sounds great, one single exchange. Having said that, I do think that there is scope for consolidation of platforms. I think what we've done in the Baltics is we've merged CSDs, and we did that with the cooperation of the regulators. So I don't think 27 platforms is the right thing, and especially 27 CSDs. But I don't think one single exchange necessarily delivers that. And then you look at the liquidity. If you can create the mechanics of it, but where does liquidity sit in secondary liquidity right now? When you look at the stats, nearly half of liquidity is off exchange. It's in bilateral, it's in systemic internalizers. So actually creating, if you married all the other exchange liquidity together, is that going to solve your liquidity problem for secondary trading? When we look at IPOs and we look at turnover velocity, which is an indicator of liquidity, it's very good on our platforms because of the retail thing. But moving exchanges and creating a structure isn't going to do that. You have to address the dark liquidity that's out there, and that's probably an area which we sort of feel that the Commission and Europe hasn't spent enough time with, partly because it's very fragmented and very complicated, but and it's changing massively.
Yeah, and I think, and I mean, I might say this, but you can possibly comment. There's also that problem that every time you have a meeting in Brussels, the banks are represented by about 150 banks, and there's only essentially 25 exchanges, not even 25, 27 exchanges to turn up to be in the same room at the same time in order to manage to flog their wares, which is also a problem with the systematic internalization market that kind of prefers the banks. And I suppose my other point I'd have to always make, and again, I wouldn't expect you to comment, is the fact that it seems to me that the People's Republic of China is pretty happy with their 4 exchanges and multiple platforms from those 4 exchanges. So I'm not quite sure why Europe wants to have 1 stock exchange. But you make a good point, actually. One thing I think is very interesting is the way that Nasdaq succeeded in the Nordic countries by getting regulatory cooperation around the CSD, because actually I think, and we're not going to name names, but in other parts of Europe there has been incredible reluctance on the part of regulators to give any ground on any part of this, which is obviously problematic. And I think it's fascinating that you get so much regulatory cooperation, that the Nordic regulators appreciate the fact that having certain degrees of uniformity and unification of the structure really delivers a better opportunity for investors and for companies to raise money.
Yeah, and look, that is a key ingredient. We see partnership with governments and regulators to achieve the right outcomes for domestic and regional capital markets that benefit the real economy. I think if you're aligned with the governments and the regulators about creating deep capital markets that are safe for investor protection, investor protected involvement, I think that is the key to alignment and making that and standardizing while preserving the uniqueness of the markets. But I think in terms of that, I think there is huge differences in terms of how different markets and different structures are there in Europe in post-trade, but also I would say arguably if you look at equities clearing, and that from my time at LCH, running LCH in terms of interoperable equities clearing, you look at interoperable competition under EMIR and MiFID that was introduced with that we had at the time with LCH, and then EMCF and EuroCCP and XClear. Now you look at the picture, and for example, in the Nordics, we don't have equities CCP. It uses interoperable clearing. And if you look at the success of that, that's really driven down costs through competition and benefited everyone. I think also that when you look at it, consolidation has come. So if you look at maybe over 80% of cash equities in Europe are cleared by 5 CCPs or less. And then I think around over 50% are done by 2 CCPs. So I think that's extremely efficient, and that's been driven by competition. So I do think regulators in some areas have been reluctant to allow competition, and I think that's been a very good function, and we have success stories around that. So my question is, in the CSD space, is really we should allow that to happen as well.
Yes, it's very, very interesting. And I mean, therefore, broadening out the discussion from Europe back out to the world, because you have got a unique perspective. I mean, you've managed to work in Australia, you've worked in the heart of Southeast Asia in Hong Kong, you've worked for the London Clearinghouse Group, which is therefore the UK's, massive export to the world of CCP clearing and capital and so on. And at the same time, obviously, nowadays you're ensconced in Nasdaq, which is giving you an opportunity to compare and contrast the huge markets of the US with your marketplaces across the Nordics and the Baltics, and also the greater European landscape. What are the kind of lessons that you think you've learned, and therefore, where do you think the world's going to be going in the near future?
Interesting question. Crystal ball time. Yeah. So look, I think that when having had that experience working across different markets, I do see that when I see great markets operate and they're very successful markets all over the world, in Asia, Middle East, Japan, and the US and LATAM as well. I think having great products and services is key to it. Also having great connectivity. One of the key things that I probably saw where it succeeds is whether we saw an LCH, which was very user driven, to Hong Kong Exchange, which was very connecting with customers, right? And also what we do very well as Nasdaq is listen to your customers, and we understand their problems. They are part of our ecosystem. How do we help our customers solve the most complicated problems? I think the great thing, what I found moving into LCH was, and the great time just after 2008 was the amount of innovation at that time. And I was on the equity side, but at the same time, SwapClear was just coming up. But really, a lot of the services that we drove was in the face of competition, but also user-led and user-driven. It wasn't from an ivory tower saying, okay, we are the exchange or we are that, and this is what you want. And I saw that. I mean, Charles was a great one in Hong Kong about really getting connected to the market, whether it was the local brokers, the mainland, or the external customers. And that's something we Nasdaq, Adina, and the Tal and the whole team we really believe in, because you have to stay relevant and to move forward. You have to move where your customers are moving and understand the problems that they need solving as part of providing that fabric to the market. So it is very much user-centric. Models definitely work, and I think competitive models perform very, very well as well.
Yes, it is interesting in that emphasis in competition. And let's face it, I mean, it's very interesting to compare the US model for listings, where what I always call the country club duopoly, and it is an unbelievably cutthroat and competitive business between NYSE and Nasdaq. But at the same time, it's a sensational game that's being played for the rest of the world because it's delivering an enormous amount of value. And that's why the US marketplace then filters through to all of these platforms who've got niches that are highly profitable that would be unthinkable in Europe to deliver a service for. So interesting to talk about all these sorts of things. Let me ask you just one more question, then we're going to get on to our standard revolutionary oration. So I'm interested how you look. You've talked all about post-trade and so on. Where do you think we go in terms of the landscape of post-trade in the near term, particularly given the fact that we've seen several organizations, not least of which your own, talking about tokenization in the last couple of months?
Yeah, so look, I think, and having been on the technology side of implementation, and been at the coalface of implementing massive systems in CCP systems and CSD systems, change is very, very hard in post-trade, especially once you've built the legacy platform. And then you've got, I mean, when I look at it, we did an exercise in Hong Kong Exchange where we had 70, looked at how many interfaces CCAS, which was the legacy system that we had, was embedded. It was about 71 interfaces and 600 members with their systems embedded into that. So how do you change that and keep everyone happy? So I think where we're leading is that in the meantime, DLT, the blockchain, has grown. So Web 3.0 and all of that has grown. And there is definitely a proposition is that, and that the crypto universe has said, is there a more efficient way of doing things, starting from scratch? So I think it's an absolute fascinating time at the moment. And how in mainstream finance we are able to innovate, disrupt, and then enable us to evolve from where we are to the place that we are. You mentioned, I think one key element to that is also, you mentioned before, is how easy it is for the investor these days. You look at everything as investing via mobile platforms, apps. The classic thing in listings is we have a normal listing disclosure documents are 300 to 600 pages with a lot of disclosures. If you want to buy crypto, you can go in these platforms and 2 clicks of a button, you've got a crypto investment. And who's to say that sooner or later there's real world assets that you can buy? So you got to look at what the investor of the future, the young people, how they're going to invest their portfolios. And I think we need to understand, so how can we harness, leverage a lot of this blockchain DLT technology in a very safe way to preserve all the good things. I mean, we have excellent execution quality and liquidity on our markets. We are very fast. We have investor protections, and we have issuer choice. So those are elements that we're very good at. But how do you marry that with the efficiencies of DLT and blockchain? And I think that is a fascinating period where we are, and it's going to upset people, and certain structures will change. But we've never, I mean, at Nasdaq's got a DNA of trying to work that out, and that's I think mainstream finance and how we grapple with that is going to be the exciting stories for the next 5 to 10 years.
Gosh, the only problem I have now is I'm a little concerned, Roland, because I'm about to ask you the last question and you've almost answered it in one way, but I'm going to say it anyway. So Roland Chai, thank you very much for being a fabulous guest today, discussing Nasdaq's blueprint for evolution goes next.
Yeah. So look, I think, but I think there is, but there's several elements. I think there's blockchain, there's DLT, there's innovation on tokenization. I mean, there's fantastic innovation there. It's how do we help leverage that? I think there's also AI, artificial intelligence, how that will impact capital markets, investing, and also resilience and security as well. And then also quantum technology. So you've got, I mean, we talk about, I mean, one of the privileges that I had was to, in my tech career, early 2000s, was to work in the web space in 2001, building FX engines that were quoting foreign exchange prices on the internet for SMEs and implementing those into Australian banks. And that was revolutionary at the time, because using the web and the internet to give pricing, FX pricing to customers was unheard of, but that became very much mainstream. So I do think we're going through another phase where those kind of influences, where there's very rapid innovation, and I think that's part of it, is how do we help our customers innovate, and we should embrace the innovation rather than keep the tide back.
On that note, it only falls for me to say thank you very, very much for being a fabulous first live guest of 2026. I hope they're all as inspiring as you are, Roland. It's really a joy to hear from you. And once again, I have to say, what a huge success it is in the Nasdaq European environment. We've seen several of your predecessors on this show. Arya Retson joined us talking about First North, and it's really, really exciting to hear how that growth cycle continues. And that's really, really important stuff to see for markets, for Main Street, as much as it is for Wall Street. So ladies and gentlemen, that's our show for today. Thank you for joining us here on IPO-VID number 198. We intend to be back next week for IPO-VID number 199. Our guest should be Troy Kane, talking about making markets in play. It only remains for me to say a huge thanks to our fabulous production team today. Thank you very much to AJ, Janella, Natalie, and smouldering presence in the background, Alexandra. It's a joy to welcome you into the studio for the first time. Without further ado, let me say, ladies and gentlemen, my name is Patrick L. Young. I look forward to seeing you either in Exchange Invest Monday through Friday in order to discuss the exchange of information, or indeed, we'll welcome you back to the next IPO-VID. I wish you all a great week in life and markets.